topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. Tax Talk for You today. It's a great day, man. I hope everybody had a wonderful, happy, and blessed Easter. Great weekend with kids, our grandkids, and some of our nieces as well. And one of my sisters. So it was a fantastic weekend. We really enjoyed it over at my mom's house. And I hope you guys had just as happy and blessed day as well. Today we're talking about IRS problems and IRS solutions to your tax debt. You know, we all hear the commercials. If you owe $10,000 or more, settle your debt for, sometimes they say pennies on a dollar for much less than what you owe. Promises for something that is achievable for some and isn't achievable for many. So, I decided today, hey, what am I going to do? We're talking about the show. I know everything about IRS solutions and solutions to your problems and what you can do, what you can't do, and why you qualify and why you don't. So I decided, first thing I wanted to do is Google it. Hey, so what does it come up with? It doesn't give you any answers, what your solutions are. What it does is it comes up with, hey, best IRS tax help services if you owe. And it says, if you owe more than $10,000 to the IRS, get expert tax help and trusted tax repair services. And what is it? It's marketing. So it's somebody's way of charging companies to market for them. They give you a list of the top 5 or 10 businesses out there to do this as they rank it. It's basically how much did you pay to get in on this? And then, we've dealt with some of these companies and said, hey, you've got to have so many reviews, so go get these reviews. And then they give you a way to get these reviews that aren't even from your exact clients. We don't ask for reviews from our clients. We have an A+ rating with the BBB. Some of our clients will go there and will rate us over there. We don't ask them to do it because when we're dealing with a client like you that owes $10,000, $15,000, $100,000, $1 million, whatever the number may be, you don't want to go out there and put out the information that, hey, I owed the IRS this much money and taxation solutions saved me, hundreds of thousands of dollars on my tax debt. It's the last thing that we want our clients to advertise out there, that they had the tax debt, they were delinquent, that they owed this money, and now they've got a solution in place. Some of our clients want to do it. Hey, gladly go do it. So you got to watch when you are Googling anything or doing any other search engine out there like DuckDuckGo or Microsoft or whatever it may be. Well, you go in there and you do it, and you get companies that are sponsored links at the top sometimes, and they're rating it, and they're also paying for that to get your attention to go in and choose them. So is there a way of paying to say, choose me, choose me? You know, hey, it's great. You know, these companies are out here and they do this. You hear them on the radio. Same thing. Scare you to death to get you to do what? Choose them. You know, so let's understand, you owe money to the IRS and you owe back taxes and you're seeking help with those IRS tax problems. You know, getting in early can help you limit penalties, can help you limit collection actions, may even help you limit interest that's out there. You know, you've got to sit down and know, hey, what do I owe? What years do I owe for? And sometimes it helps to even know why you owe. And if you don't, you know, it's a good place sometimes to start with doing a tax analysis to figure out, hey, maybe the IRS put a substitute for return and you can file a return and maybe eliminate a lot of that debt. Sometimes you may have gone through an audit and you didn't respond. So maybe an audit reconsideration might eliminate some of that debt. So you get in the picture really quick. It's not a be all, end all, one solution for everybody across the board. You know, we talked about people's dreams, aspirations, and what are they thinking? Well, everybody is looking for that light at the end of the tunnel. And the first company that goes out there and sort of makes a promise, hey, let's say, possibly settle your debt for far less than what you owe. So you're talking to a company out there without asking you any questions, without going through a full synopsis of where you're at in your life position. They basically say, hey, possibly we can settle that for about $1,000 or about $100. Hey, you might even be able to settle for $1. How's that? Ooh, sign me up. That sounds absolutely the perfect plan for me, right? And then you get 6 months, 9 months into this and they go, you don't qualify for an offer in compromise. So we're going to now put you on a payment plan. And it's going to cost you this much more because, you know, we've done all this work. So now, you know, we've got to change it and do this. Well, that's not right. That's not the way to go. Learning about the solutions and understanding the different solutions is why you're here today. Or maybe you know somebody that has a tax problem and should be listening to this program. And so you got to tell them, hey, get over to taxtalk4u.com and hey, listen to this program or tune in right now to W4CY Radio and learn about what your solution can be to the tax debt that you have. Whether you created it, the IRS created it, or hey, it's just something that happened. You know, we get on a program called Ask the Experts, you know, every month a couple of times, and they talk to us about solutions to tax problems. And when people call us, you know, we have a no judgment zone. We're not passing judgment on why you got here. We want to pass the judgment on the IRS of getting you that solution that you can actually qualify for. Now, sometimes when people call us, they go, well, XYZ resolution company told me that I can get an offer in compromise and I'm going to settle this thing for, you know, $1, $100, whatever it may be. And we go, that's not possible. You make too much money, have maybe too much assets. So now we're going to learn about the solutions to the tax problem you have. Now, you have various solutions. And the one everybody hears about on the radio is offering compromise. But, you know, it's not the be all end all. Maybe it's a partial pay installment agreement. Takes advantages of lower payment plan, debt falling off because of statute of limitations. And so maybe you have access to that. Maybe it's just a lower installment agreement for a period of time. So you may have a lower installment agreement for a year, maybe 2 years, and then it steps up. But it's still going to be a full pay agreement. Maybe you can actually qualify for that non-collectible status because you can't afford to pay anything. See, there's multiple options out there depending on your situation. And then there's the full pay installment agreement. And sometimes you make too much money, have too much assets, and you just got to fall into that full pay installment agreement as well. That's sometimes what the solution may be. Sometimes that solution is fixing tax returns, making them right, and claiming all the deductions that you deserve. So it's addressing the tax debt in many different ways to get the best solution to your tax problem. We use variable techniques from our toolbox to get you to that solution, to get you to where we can get rid of the tax debt in the best way possible. Hey, we're going to take a quick break. In this next segment, what we're going to talk about is offering compromises. How do you qualify? How do you get them? Are they the best thing for you, depending on your situation? And we'll do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. And while we're at it, if you call Taxation Solutions here now, and you mention Tax Talk for You, and that you heard it here on the program, we're going to give you special discounts on your tax analysis and solving your tax debt. So pick up that phone and get that free consultation at 888-930-1016. Again, 888-930-1016. Mention Tax Talk for You or W4CY Radio, and we'll get you those special discounts for just listening to the program and getting in to get us to help you solve that tax debt problem. Now, we were right before the break talking about one of the options that are out there. It's the option everybody hears about. Hey, you get an offer in compromise. You get an offer in compromise. And you get an offer in compromise. And they can't just give them to everybody and anybody. You've actually got to qualify. But the offer in compromise does allow you to settle your tax debt for less than the full amount you owe. Now, it doesn't mean it's going to be $1,000. It doesn't mean it's going to be $1. It doesn't mean it's going to be 1%, 10% of what you owe. And sometimes it's a third of what you owe. Sometimes it's half of what you owe. but they offer this out there based on your financial situation. So it's a legitimate option when you can't full pay your tax liability, or doing so creates extreme financial hardship. So they're going to take, being the IRS is going to consider your unique set of facts and the circumstances. What is your ability to pay? What is your income? What are your expenses? Now, when they start looking at what are your expenses, they're limited to what the IRS has as national standards. Those national standards don't necessarily equal what you pay for your mortgage or your rent or your housing and your utilities, or food and clothing. They determine the standards based on where you live, zip code and area, and then they apply the standards based on what they have for that area. Your expenses may be more than what the national standards are. And that means they disallow it. The max you're going to get is the national standard. Or, hey, maybe you have 4 or 5 cars and you're married and you have cars for your kids. Those cars don't count. Boom. So you got 5 cars, 3 for your kids. Tell you to sell them. Get rid of them. The expenses on those don't count. The car for you and your wife, they count. But the other 3 don't. You got a collector car. Sell it. That's what the IRS is going to say. You have asset equity in that vehicle. Now, it has loans on it. If you have asset equity and they can say, hey, we can do a quick sale, 80% of the value. If it's more than the equity or the debt on that vehicle, they can ask you to sell that vehicle and apply it to your offer. They're not going to allow you to say, hey, you use this money to make the payment. That should be going towards your offer. So they look at ability to pay based on the expenses they allow and your income. And you have to declare all your income. So not just W-2 income, but investment income. Maybe you use your house or have a second house with Airbnb. That's income. Got to declare it. They're going to look at your tax returns. Did you declare this? What did you declare? They're looking at your bank statements, your bank accounts. How much money do you have in there? What do you have actually coming in? And they verify everything. You can't hide property. You can't hide investments. You can't hide your 401k, IRAs, Roth IRAs, any of those investments that are out there. If you have them, they're going to find them. If you think you can hide land, other type of investments that maybe houses or something like that, they will find them if your name is attached to them. Now, we can go through and get you qualified for that offer and compromise as long as you are honest and reveal everything. Maybe you don't qualify, or maybe there's things we can make changes in your life to help you qualify. Now, a word of warning. If you don't disclose things and the IRS finds them, it's fraud. It can be, if it's significant. When the IRS starts looking at an offer and compromise, they look at your bank statements, past and present. They see large cash transactions coming out, going in, whatever it may be, and now they start asking questions. What was this for? If you just spent money to spend money or gave money away, or maybe you gave away vehicles to your children because you wanted to get them off the books before the IRS could find them, the IRS will find those records and they'll ask what happened to them. and then you gave them away, their dissipated assets, they will add those back as ability to pay. Same thing when you pull money maybe out of retirement accounts, so looking for what happened to it. Where did you spend the money? When did you spend it on? And then they will add that back into the offer as well. So, you got to look at these things. Some of these things we can't find unless you disclose to us. And that's what we'll be looking for, trying to help you get the best offer that's out there if you do qualify. What we look at is, how are we going to make this offer? What's going to be the right amount? We're looking for an offered amount that we feel the IRS is going to accept. And we may even step it back, but we'll discuss that with you before we make the offer. We had a client that came to us a year or two ago, and we were putting in an offer. He absolutely qualified for an offer. He owed well over $300,000, and he had equity in his house. And that was really all he had. And the IRS, regardless, was going to either make him sell the house or come up with the equity portion in there. He could get a loan from family members for the portion that he had to come up with. So we actually made a reasonable offer of right around $60,000 on over $300,000 worth of debt, which isn't a bad offer. Based on his situation, he can borrow money from family to pay this back. But we also knew the offer was going to be closer to 70 or 80. So we were trying to figure out a way we could fight the IRS and keep that offer down as low as possible. We ended up representing him and working with him, and got the offer accepted for a reasonable markup over the 50 grand. We ended up in the 70s out there. So still better than the 80s we thought it would be in. So it ended up being a really good offer for the client. And he had problems identifying a couple of checks that the IRS found that went out of their account for a lot of money, and it ended up being added back to the offer. He couldn't account for it. He couldn't account for, repairs to the house or what. He couldn't even remember what he did with the money. Who knows where, who, what, where, when, and where it went. But it's something that, when the IRS is reviewing, that we have got to be prepared for. And preparing for that with you is sometimes the ideal way of doing it. And then being able to address those problems once they come in, or once the IRS asks the questions that are out there. The IRS does have a nice little tool that you could actually do a preliminary analysis to see if you can actually pre-qualify. But if you got equity in a house, there might be a possibility of qualifying. It depends on how much your equity is. Now, a year or so ago, when housing prices were going through the roof and the equity was exaggerated, some of the housing prices have come down in some areas, so you may not have as much equity. And then you got to know how the IRS is going to treat that equity. Are they going to take the full value of the equity, or are they going to take, fire sale value, which is like 80%? And then do you have any equity left after the mortgage once they apply their proper percentages? And then how do you disclose that to the revenue officer on the offer and compromise 656, 433A and B that you would file with that offer, and making sure that that's disclosed correctly. Some of the other things that you really need to do to make sure that you're eligible, and some of the rules that you need to follow to be eligible for this offer and compromise, is what we're going to discuss here shortly in the next break. So make sure you're here and listening. What are those rules? with that offer in compromise. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're out here talking about offering compromise and solutions to your tax problems right here in W4CY Radio. If you've got a tax problem and you owe the IRS money, again, call taxationsolutions.net. Tax relief, 888-930-1016. Again, 888-930-1016. Get the solution that you actually qualify for, not the solution people want to sell you to do. We look at who's eligible, who's not, how do you qualify, what are the rules, what are the regulations, and can you follow them? So to be eligible, very first and foremost, you must have filed all required tax returns and made all required estimated tax payments for the current year. So, this is 2026. First estimated tax payment isn't due, but it's coming due. Here in 9 days, filing deadline, April 15th. So you would also not only have to file your return or file an extension, but you would have to make your first estimated tax payment if you're required. So you got to be aware of that, get that estimated tax payment in there as well. Now, you can file an extension, but if you're going to owe money, you better have paid in everything you owe for April 15th. Otherwise, get that tax return filed now and then file your offer in compromise right after that so that that can fall into the debt here and not affect your offer, or wait a few weeks and then file your offer. But if you're on a deadline and you're on a tight deadline, then you may not have time to wait or waste thinking, I got to get this thing filed, and I'll file in October, but I'm going to owe money. And no, it isn't going to happen that way. They're going to kick your offer. Okay. Now, the other thing about filing is you cannot be in an open bankruptcy. If you've declared bankruptcy, you can't file an offer in compromise. Even if certain tax debts are not in the bankruptcy, you are, and you're not allowed to file the offer while the bankruptcy is pending. Now, once you do that, you're in compliance. Now, if you own a business, in compliance means that you're making your payroll tax payments and payroll tax deposits, and you're current and your filings are current. So if you run a business, and we're not just talking about your personal return, we're talking about your business return. We're talking about payroll tax returns. We're talking about the 940 W-2s, and of course all your 941s. So all those you have to be current with to be able to apply for that offer in compromise as well. So now you've gone through all that. You've done the calculations with us on your equity, your financial position, money that you're making and your debts, and hey, we're going to go and file for an offer. So you got to keep making your estimated tax payments if you're required every quarter. And then you got to stay in compliance. So in compliance while the offer's pending, of course. If there's tax returns to be filed, file them. Payments that have to be made, you got to make them. Now, what happens if you don't? Give you a chance to make good on it. We've seen some people not make estimated tax payments and argue they didn't have to, but the IRS said, hey, your offer's pending and you're required to, or prove that you can't afford, or prove you didn't make enough money and not have to do this, because you can actually go on actuals for your estimate. You can prove it, and you got financials. We can share it. Now, don't come back with a surprise at the end of the year. Oh, I get to owe more money and I have tax debt. It's going to get your offer kicked out. Okay. Unless you pay that tax debt. But then if they prove that you should have been making estimated tax payments, guess what? Not compliance. Could get that offer kicked out. Now, you know you got to be in compliance while that offer is pending. But what about afterwards? It's settled. It's done. I can do what I want. Who cares? IRS does. Hey, it's not the first rule of offering compromise. We don't talk about it. It's the first rule of offering compromise is staying 100% in compliance with IRS tax rules, not just for 1 year, not just when it's pending, not 2 or 3, not even 4 years, 5 years after the offer is not submitted, but actually accepted. So that could be 6 or more full years of compliance. Wow. So you're telling me I submit an offer, settle my debt with the IRS, and I have got to stay in compliance for 5 years after it's accepted? Yeah, but what if I don't? What happens? Floodgates open and all that debt comes flooding back. Hey, I had a client many years ago that came to us that had his tax debt settled, didn't want to be on transcript monitoring, didn't want to have us monitoring what was happening with the IRS and if any problems were coming up with the IRS. And it wasn't monitored, couldn't monitor his estimated tax payments or tax filings. He was off on his own because he got his offer. He decided, I'm going to file my own returns. Comes to find out, he actually went to a non-reputable preparer because a friend told him, hey, this guy was really good and can get everybody a refund. He went in there, just found out a little while back that the guy decided he was running a mom and pop business and they lost close to $20,000 or $30,000, which saved him a bunch of money, and was supposed to get him a refund. But guess what? It set him up for an audit. And he's fixing to lose the audit. He's losing compliance. And when he got done with that audit, the IRS not only fined him, it's not my fault, not my fault. The preparer did it. I had no knowledge. Read what you signed on that tax return. You sign under penalties of perjury. This is true and correct. That's your short synopsis of it. Read it. It didn't say I signed this under duress. It didn't say I signed this under the fact that I didn't read it, have no knowledge of what's on there. The IRS expects you to have knowledge of what you're signing. I hired a professional and I'm supposed to have the knowledge to understand taxes. You know, when you're sitting there looking at your taxes and it looks too good to be true, ask the question, how? If I've claimed the proper number of kids and dependents on my tax return on my W-4, so that when they're processing my payroll and you all of a sudden get a huge refund and it doesn't make 100% sense. Yeah, my friend told me he was good. They didn't tell me he was not reputable and make up business or makes up something that goes on your return. See? Think. Use your brain. Make sure they're licensed. I always tell people to make sure they're an enrolled agent licensed by the U.S. Department of Treasury to represent you to the highest levels of the IRS, because they're the most knowledgeable people, like myself, of IRS tax code and what applies and doesn't apply, and how can you save the most money. So we know who's eligible, we know the compliance portion of it, and we know what happens when you don't stay in compliance. So take advantage of your offer, stay in compliance. Now, is there other programs that are better for you? Could be. There could be partial pay installment agreement. Now, how is that different from an offer and compromise standpoint? And how is it impacted based on your situation and compliance? And that's a couple of things we're going to talk about right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Hey, if you're a trucker out there, and Taxation Solutions got their start helping truckers solve their tax problems and tax debt. A couple other companies have now kind of walking in our footsteps of that, helping truckers with their tax debt. But, hey, give us a call if you've got bookkeeping, taxes. We help keep you on the road, so you don't have to mess with your bookkeeping when you're home with your family. Could you just imagine spending Easter working on your accounting and your bookkeeping instead of spending time with your family, where when you get home, your time is too valuable to spend doing the tasks that we can do to help you save money on your taxes. And our service is tax deductible for you too. But give us a call. Give Trucker Tax Tools a call at 877-966-2477. Again, 877-966-2477. And tell them, hey, Tax Talk for You sent us. And we'll get you special discounts right there just for listening to the program while you're on the road. And there's no better time to call. And you might even get to talk to me sooner rather than later. I love talking to our truckers all around the country to help them save money on taxes. That's what we do. Now, partial pay installment agreement is exactly the way it sounds. You're going to partially pay your tax debt to the IRS. So, maybe you owe 100,000 or 200 or even 50,000 or 40,000. Yes, it's going to be a payment plan. Yes, it's going to be for a period of time. It could be as long as, 7 years out there. But what we do is look at your tax debt, the whole picture, and see, maybe you had tax debt that was 6, 7, 8, 9 years ago, even close to 10 years ago. And the IRS is demanding you're going to be on an installment agreement, and they're not going to be able to get you an offer in compromise. Or maybe you could even qualify for an offer in compromise. But this partial pay installment agreement would make most of the debt, or a lot of the debt, fall off under the statute of limitations. And there could be a great savings for you from twofold. One, offer in compromise pauses CSEDs while the offer is pending. Partial pay installment agreement may not stall it, or will stall for a short period of time, but then those can resume. Partial pay installment agreement has compliance aspect to it, but not one that's going to put the nail in your coffin. So once you get to that statute of limitations and the debt falls off, if you fall out of compliance, the debt does not come back like it does under the offer in compromise. So you might go the partial pay installment agreement, pay a little bit every month, and over the next year, 2 years, 3 years, the debt slowly falls off based on statute of limitations. So there's multiple ways of getting around doing a full-blown offer. Offer in compromise can, come back to you, whereas this partial pay installment agreement is not, as we said. But if you're in a partial pay installment agreement, you will want to make sure you're consistently making those monthly payments so that the debt slowly falls off. And now once we get several years of debt falling off, maybe your life situation's changed and you're at a more reasonable amount, you might want to pay more. And without changing what we've set as the low bar payment, you can then thus go in and start paying on the other debts that you have out there. Really kind of sneaky, isn't it? Get there, debt falls off as you go. Yes, you may be paying off more of the current debt later on as opposed to the older debt, but it's debt none the same. Once that older debt continues to fall off, those payments you're making won't be applied to that older debt. It'll only be applying to the more current debt based on your situation. Now, how does that affect equity and other things in your home? Well, depending on how much money you owe, they could be saying, hey, yes, you have equity and you need to access the equity in the house. But depending on how much money you owe to the IRS and how much money you owe on your house or other investment type property would really greatly vary what the IRS could require from you as a payment plan on that debt. Now, one of my sisters was in town and she was looking at her stuff. We do her taxes for her, so she didn't have any tax problem. But before she came to us, we had to go back and look at her past tax returns and found out that this guy that she was using was one of those fly-by-night, fly-seat-of-your-pants kind of guys, and was creating tax debt for her. And she was, just like everybody else, sometimes embarrassed to actually pick up the phone and call us. But once she did, we were able to give her some relief and help her through the problems and save her money on taxes. And then found out that her taxes were all wrong. So we went in and amended them and reversed what was going on and got it done the right way so that she would say, okay, I understand, and save her a lot of money. Didn't think I could do that. Hey, we have the techniques and the knowledge to be able to find the things to do. And that's why we tell you to give us a call here at taxationsolutions.net. at 888-930-1016. Again, 888-930-1016. We love what we do. We love helping people and getting the right solutions to your problem. Now, in this partial pay installment agreement, if you do miss a payment, it can be kicked out. But if you've already passed statute of limitations, even if it gets kicked out, that debt's still going to go away over a period of time. So if you were coming up on a year's that's going to be out there and been sitting there for 10 years, so you would have filed this back in 2015, and you've gotten to statute of limitations, some of the debt has fallen off. And if that debt's fallen off, they cannot do anything to resurrect it. It's gone. That's what statute of limitations mean. We exhausted it. It's done. We can't do collections anymore. But a lot of times you see when they are coming up on those statute of limitations, they are pushing hot and heavy to get you to accept not using those statute of limitations and actually extending them for the IRS. But there's not a real reason for that. If you're close and that close to running out the statute of limitations, don't expect to. So use the rules within the IRS to your advantage. Now, non-collectible, sometimes we don't even want to use non-collectible, but sometimes we use it. And especially maybe there's a time period in there that the CSEDs are going to run out within the next couple of years, and you're not looking at changing income very much, or you're not going to change income at all, and you qualify for non-collectible status, you can leave the debt out there. And as long as your income hasn't changed at all, and you've proved that you are non-collectible and get it approved, you can let it sit out there, especially maybe you're on Social Security and you got tax debt, it would get you in non-collectible status. It can sit there indefinitely until it runs out, and it'll run out year by year by year. Now, that doesn't mean the IRS isn't going to come back and ask a question about increased income. They're always looking for increases in take-home pay, increases in what you're going to add to our national debt via collections. And you got those kind of situations, and now you got something else to deal with. But some other investments might be right while you're away on the vessel, that they can't get to this money because you're out here on the vessel and floating out in the ocean somewhere, Gulf of America or Pacific, Atlantic, whatever ocean maybe that your heart desires to be out in. If you desire to be out in the Arctic Circle, then it is what it is. It's got to make sense, for you as you're going through this whole deal and making sure that it's right. Man, our time flies when we're having fun and talking about helping people. Mondays at 10 a.m. Eastern time is the time to be here listening to Tax Talk for You. We're trying to help people in every way possible. So make sure you're here at 10 a.m. Mondays for Tax Talk for You. Go follow us on Facebook so you never miss an episode. Go to Tax Talk, 4, letter U.com. You can see all of our podcasts over there. We're trying to make sure we get them all posted. If you got a tax problem or know somebody that has a tax problem, send them there so they can hear this podcast so that they can find the right solution for you. Now, we will see you next Monday right here, 10 a.m. Eastern Time on W4CY Radio and Tax Talk for You. Have a God-blessed and glorious week. Enjoy it, your family. enjoy your work, and stay blessed. And we will see you next week, 10 a.m. Eastern Time, right here at W4CY Radio.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.